welcome back to BLOCKTV, where it's time for cryptonomics and a closer look at the emerging digital culture that is slowly becoming a reality. Joining the mix as of late is none other than the powerhouse that is Uber. The car-for-hire giant announced a push into financial services this week with the promise of Uber Money. And you may ask yourselves what Uber Money may be, why it's needed, and what it spells out for Libra, or the promise of Libra. I've got, luckily for all of us, Asha Westbrook-Evans, BLOCKTV's senior correspondent, here to explain it all. First of all, why does Uber need Uber Money?
I don't know if Uber, well, maybe they do need Uber Money.
Why do we need Uber Money?
Yeah,
okay.
That's more the important question. Do we need Uber Money? But you know, Yael, this isn't actually necessarily for you and I, and I'll get into this in a moment, but Uber Money at its core is Uber's swing towards fintech and financial services. They're doing what a lot of other big companies out there are doing. You know, we're talking about Apple, we're talking about Amazon, we're talking about a lot of these big players, Samsung, coming out and creating financial service products in conjunction with their traditional services, so they can corner that element of the market, really stepping into the territory that were traditionally held by banks and other financial lenders. You know, there's been a blending, a weakening of regulation, the digital revolution that's allowing this to happen. So Uber Money is everything. It's debit cards, it's credit cards, it's effectively anything short of just pure banking services. It's getting short-term loans, effectively. They're saying it's better than the payday loan industry, but a sort of overdraft service for users of Uber Money.
But not for me and you, right?
Not targeted at me and you, yeah. Mostly targeted at the 4 million drivers that Uber has on their payrolls. Contracted workers, employees, however the regulators decide that they need to be called. But these drivers that they have, that they are going to provide all these financial services to. They offer, on the Uber Money website, you see big claims like, get your payment instantly, don't wait weeks for your paycheck to arrive, get paid as it comes along. You need a little extra money to overdraft to pay the gas bill before you start your shift. We'll let you go $100 into overdraft. That's fine. Keep your money with us. You never need to leave the Uber ecosystem. Talk about a network innovation.
So basically, if you work for Uber and you're an Uber driver, is this a decree also? You have to use this Uber Money
Look,
back? We don't know yet,
yeah,
right?
nothing is coming out saying that that is the case now. But yeah, maybe call me a cynic. I would be.
No worries, I will. Yes.
I would be surprised if it doesn't end up being at least a pushed element of Uber services. Another important point to note with Uber Money is at the moment, still around the world, mostly in the developing world where Uber does operate, 40% of their payments, of Uber payments, are still made by cash, which is something Uber is very keen to move beyond.
Trying to get to Nix.
Exactly. Yeah. So this helps to facilitate that, both for the drivers there, for users there. You know, like arguably, in order to improve regulation and sort of movement and taxation and the flow of money, remove black money from the situation. That being said, it also is a very powerful means of control for a company which seems to like having a fairly controlling hand over its.
That's and brilliantly put. You're very PC. I won't be looking at Uber's past of. They were called the bully of the startups, and it worked for them.
Right.
But let's say this Uber Money, and it's for their employees. I'm theorizing with you. What does that spell? For people, let's look at a scenario. You're an Uber employee, fine, you took that loan, et cetera, et cetera. All of a sudden you want to leave.
Right.
What does that spell?
That's a great question, Yael, and one that they haven't come out to address necessarily. What does it mean for the Uber driver who suddenly decides, you know what, I no longer want to work for Uber, but I do have my finances tied in with Uber, particularly if I'm one of those unbanked individuals who was working in a third world country, and now suddenly, am I still using Uber Money to access my finances? Am I being charged for that? Are there different conditions? These are all very important questions that are not being answered, Yael, so far, but early days,
entirely early days. And have you seen any pushback, any reports, any regulating noises on this bit of news?
Not a lot so far. I mean, there's a lot swirling around at the moment. Obviously, Libra, when it comes to financial services, is the big focus in the United States at the moment. So I think this one's slipping under the radar. But yeah, there's another key point of the story that we need to address here as well, which is the reason why Uber is doing this. Uber, as we all recall, back in 2018 had back in May rather, had a less than successful launch, a public IPO that saw considerable losses, it was marked as the end of the unicorn bubble that existed of those new startup companies that were valued at over $1 billion. Their their shares were originally offered in their IPO at $41. It now, to this day, still stands 22% down from the initial offering, down at around $32, and doesn't look likely to climb anytime soon because another factor in this, Yael, there was a lockout clause that kept about 81% of those shares available, locked, kept with major shareholders and with executives within the company, locked out. That's set to expire in November. Early November, around November 6th, that contract is set to expire. And suddenly, if the current share value were to stay, which it's unlikely to, $24 billion worth of Uber shares are going to flood the market. Yael, Uber doesn't really have what could be called anything considered a profit model. This was the big concern of Uber when they made their IPO.
That their business model is just not profitable.
It's not profitable in any way, shape, or form.
So raises issues, and well, it made me think of WeWork. But
yes. Well, there are some definite comparisons that can be made. But they suddenly are scrambling to find a profitable model so that people will not just suddenly dump their shares. Those large shareholders, those executives, those who want to get out while they've only lost 22%, aren't just going to dump this Uber stock onto the market. Absolutely flood it and make their company effectively valueless. I mean, it's going to be a huge problem for this company that doesn't yet have a profitable business model. They don't have a profit model they can turn back on. They don't have that way of raising money. So it seems alarming.
Give me the worst case scenario. Let's say that happens, and come November, there's a huge dump of those shares.
Right.
What can happen to Uber?
It's a good question. A number of potential outcomes can happen. Obviously, the most extreme being full bankruptcy or
Because I'm just thinking that would bode very badly for any startup that started that way. That became that was their route. Because the argument by all markets is that the business model of these new companies is lacking.
Right. The growth at all costs model has, I think 2019 has proven for perhaps better, some would say worse, but I think for better, as a turning point where it was no longer just acceptable to grow and grow and grow without even considering what the possibilities were. Now, good business models are being looked for again. Cooler heads are prevailing in financial markets and saying, hold on a second, this company isn't profitable. You can't just grow and expect that to be acceptable. There needs to be some underlying business nuance that's there. So Uber money, I don't know, you could argue it's their way of maybe potentially looking for new revenue streams, or you could say it's them, excuse my language here, whoring out their drivers for the purpose of bleeding them even more dry, something they've been accused of.
I was about to say
as profits have fallen for drivers considerably in the last few years.
That is, sadly, that's an argument that you're not the only one that is making. Finally, what does this spell for Libra, if Libra ever happens? Because Uber, at the end of the day, was one of the final big names left on that little, consortium, the Benetton colors of the world.
Uber is certainly, in terms of market and brand recognition, they're one of the big ones left on that market. And it smacks as odd, Yael, that Uber Money is coming out to release their own internalized credit, debit services, loan services, etc. When isn't Libra supposed to do all that for everyone? And aren't they part of that association? So maybe it shows a shaking of the belief they have in that service. Maybe it's all part of a grand plan of,
that we're not aware
of 15-dimensional chess that we're not aware of, where they're actually going to tie that into their Libra services later on. Maybe it's all going to be put on the Libra network when it launches. But Yael, from this vantage point, it does look a little suspect for the Libra project as a whole. What the true belief or not of those association members who, by the way, as reports are saying, still haven't paid that $10 million over to
to that. Nodes. They're signed on that letter of consent, but have not forked out the money.
Exactly.
Fascinating.
So,
but as you said, I think one of the bits of information out of this, that November date for Uber is
shares flooding the market.
Shares flooding the market. It will be quite a one to look at. We'll be following that closely. Asha Westrup-Evans, thank you. We were, of course, Cryptonomics. BLOCKTV will be right back.
For more news and updates, follow us on Twitter.